Welcome. We are back using a different camera and mic today, so I don't know if things look a little bit different or not. But it's just like the standard MacBook mic and camera right now, so hopefully it's all good. I didn't even really check the audio. I think the music might be a little bit loud. Let me know in the chat if there's anything wrong with the audio. What's up today? Lincoln, Zeke, Goldminer, Plebere, D, Josh. What's going on, everybody? Hit the like button. Lincoln says sounding and looking good. Glad to hear that. Sounds good here. Perfect. All right. So today was crazy, and if you watched last night's stream, you had a pretty decent. It's weird that I have to like look straight. I'm usually looking to the side when I'm talking to the camera, but this is really strange, honestly, because I'm looking at my chart and the camera at the same time, which I guess is pretty cool. But today was pretty crazy. If you watched last night's stream, you probably were ready for today. We talked about it last night, you know, so we'll talk about it again and we'll see what happens tomorrow. And yeah, Pizza Box, this is your first live stream. Welcome to the free trading movement. Hit the subscribe button, stick around, watch the free course, link is in the description, and hopefully you enjoy everything that we've got going on over here. Make sure to join the Discord as well. It's completely free. The link for that's also in the description. So we're going to get started with crypto. After that, we're going to be talking about the overall stock market, which is not looking too good right now. Cathie was on CNBC for like 45 minutes today. If I can pull that up, actually, we might actually look at that together on stream tonight. We might watch the replay of it. I don't know. I'll see if I can pull it up or not. But yeah, so we'll see what happens. Let's get started with crypto. Bitcoin pulled back. Last night I did say it was looking pretty good to me, and unfortunately you pulled back. You know, you have this thing with Russia. Apparently the troops were being withdrawn from the border, and then they are showing like hospitals being set up, and they're, you know, satellite images. Like, you know, all of you probably know about all that more than I do. So you've got that going on, and you also have some news today. Let's see if I could pull up an article. Looking for a specific article. Basically, I think Biden's going to be speaking about crypto regulations next week. Alright, so this is actually from 3 weeks ago. But it says the Biden administration is preparing to release a government-wide strategy to regulate cryptocurrencies as early as February, with the market in the throes of a deep rout linked to uncertainty. I'm not sure what that means. Over the Federal Reserve's fight against inflation. This is from Yahoo Finance a few weeks ago, but today there are some new reports. I don't remember what day. Maybe somebody in the chat can help me out here. I know Cheddar Freeze, I think, dropped in the Discord today, but we might hear Biden you know, talking about his thoughts on crypto regulation. Or we'll see what happens. I just saw the headlines. I don't know too much about it, but the combination of the two pulled it down. We talked last night about how there's times where you have technical things going on and fundamental things going on, and today was just not a good day for crypto in general, fundamentally, catalyst wise, and you got to pull back right when things are looking really, really good to me technically. So yeah, that's tough. You had the inverse head and shoulders, you were curling towards the neckline, and then boom, you just shot down. I mean, also at the same time, you have the stock market being really, really red today, and for almost like, it seems like pretty much since like the COVID crash, Bitcoin and overall like stock market have just been moving very, very similarly. There's been times where, you know, Bitcoin runs and the stock market's not doing much, and vice versa, of course, you know, but overall, you know, there's been, you know, I can just say off the top of my head, like most days I see like the market's very red, crypto's also red, and you know, when things are green, crypto's also green. So yeah, we definitely had a lot of correlation between the two. From a technical standpoint, your MACD just went back to red on Bitcoin. It broke under this level. This was a huge level we were talking about last night on stream, 42,000. You're under it, you know. It's still kind of a zone, you know. It's not really over for Bitcoin. I don't think it's technically over until you break under, like, I'd say like 39,000, because you have a couple highs over here, a low from over here. So I'd say you're still okay above 39,000, but you're kind of hanging on by a thread right now. Even the inverse head and shoulders argument, it still could be valid. We could just move down this potential right shoulder to over here, and it would actually be even closer to the left shoulder. But it's just not as nice as it was yesterday. That's just how I'm looking at Bitcoin, and that's really it. Hopefully it can just pivot above 39K. Litecoin is another swing trade. This one it pretty much hit the target. I mean, this thing was like 1% away from the target, and it didn't perfectly touch it. So I don't know, for some of you that might have been an amazing trade. For others, maybe it was a very frustrating one, but now it's back at the entry. I'm just gonna let this one go. I'm not gonna mark it a break even. If it hits the stop, eventually it hits the stop. Hopefully it just pivots above this blue historical support zone at some point, but you do have confirmed hidden bearish divergence on the daily, so you do whatever you want to do. Not looking great right now, but all you want to do is reverse above, like, you know, $100 pretty much. So hopefully you can do that. That's $17 of wiggle room. And then Ethereum, hidden bearish divergence is now nearly confirmed. I had this charted a couple days ago, then I took it off yesterday when you bounced back up, or the day before, and now you're dropping back down again. So yeah, hidden bearish divergence. You're getting this on a lot of altcoins as well right now. That doesn't imply a continuation of the downtrend you've been seeing since November of last year. So, you know, Ethereum had a nice move off the PCZ of this shark, but as long as it's under, you know, this little resistance zone in the 200-day moving average, I don't think you can say Ethereum is bullish short term. Long term, obviously, you're still in a very bullish trend if we zoom out, but short term, you're still making lower highs, and we'll see if it makes a higher low or not. Hopefully it does. And that's really it for crypto. We're going to pivot over to stocks right now. A lot going on there. So make sure you hit the like button, hit the subscribe button if you're enjoying the stream. I'm going to give you my full breakdown on the stock market right now and everything that is going on. All right. First thing I want to start off with, I'm going to have to ping premium members tomorrow about this, but everything that's happened so far this week in the market, I hate to say it. No, actually, I love to say it, but I predicted last Friday. Like literally, you could see this was February 11th in the Discord. That was last Friday, almost exactly a week ago. And this whole entire week I laid out for premium members in the Discord. And even if you're not in premium, I showed you all this on Monday night. Go to Monday night stream, and there was this exact segment where I talked about what I shared in premium on Friday. This was my plan going into the week. I executed the first part of it according to plan. The second part of it, which was like the pullback part, I kind of missed out on, which we'll go over right now. But I said last Friday that my idea for this week was to play the oversold timeframes in the beginning of the week for a dead cat bounce, which we definitely saw. Okay, right over here from the low on Monday to the high yesterday, you had a 3% bounce for the S&P 500. We had a handful of options trades do very, very, very well. We can scroll up over here. You can take a look. We had 1, 2, 3, 4, 5, 6 trades all do well. Those are all calls. So we played the upside very, very well. And then I said over here last Friday that my plan for the week was to actually go long in the beginning of the week to play the bounce, and then go short again or get puts when you're retesting your previous supports for the pullback. So we had the FOMC minutes yesterday, which you actually originally went higher, and then today we gapped down, took out the levels that we broke out of yesterday, which I'll show you on lower time frames in a couple minutes here. And then you just kept selling off. So now you got the pullback. So pretty much, you know, this arrow, like at least this part of it has started to happen. Like you haven't really gone down to like 426 on the SPY, which you could be headed there soon, but this part of, you know, the move has already begun. So beginning of the week was green. Now we're getting some red. We'll see what happens tomorrow. But I still did say, I think overall in general for the market, you could just get more of a stock pickers market. You are seeing relative strength here and there. I mean, a lot of the swings were green this morning. Fisker was up very, very nice in the morning. They did have earnings yesterday. Baba, which is another swing, was green in the morning. Lucid, which was another swing, was green in the morning. Like, a lot of the non-premium swings are like green today, I think, apart from CLOV. And then they kind of sold off in the afternoon when everything really pulled back harshly. I think today was the worst day for the Dow Jones in 2022, if I'm not mistaken. Correct me if I'm wrong. But that was my thoughts going into the week, and I did say on Tuesday that the first part of the plan worked out well, and then we had the FOMC minutes on Wednesday, which was yesterday, and yesterday we talked about how we were at huge make or break areas, and unfortunately, but also not unfortunately, we're kind of breaking. We're not really making right now in the market. So let's go over that now. You want to pay attention to this, okay? Let me take a look at the chat before we really break down the market. This is going to be the majority of the stream tonight, just talking about the market, and then I'll go over the swings. That's, I don't know, we'll probably have time for take requests, we'll see. And then I said we might look at the Cathie Wood CNBC interview today. And let me see what's up in the chat. Anything? Pizza Box, I'm a member so much, appreciate the help. Roku got destroyed, yes, on earnings it did. Silver Shrimp says 95% of my wealth is still in IPOF. I hope that goes well for you. All right. Nutty, yeah. Max, last night's stream was amazing. It really was. I mean, if you watched it, even if you didn't watch last night's stream, go back and watch the stream. That's all you got to do. I mean, that's a stream I want you to really just watch the whole entire thing. I think it was like an hour long. So let's talk about the market right now and how the technicals look. All right, MACD crossover to red on the daily. Now, what does that mean? Something I actually talked about a couple days ago. Hidden bearish divergence is now confirmed on the daily for the S&P 500. Okay, this implies a continuation of the short-term downtrend that we are seeing. You have hidden bearish divergence on the daily for the S&P confirmed. On the QQQ, it's nearly confirmed. On the Russell 2000, there's a potential for it. It's not really developing much right now. Same thing on the ARK ETF, there's a potential for it. And on the NASDAQ, same thing. And on a lot of individual stocks right now, you are going to be seeing hidden bearish divergence, okay? So you are getting hidden bearish divergence on individual stocks. The indices, the major ETFs, you're getting hidden bearish divergence on a lot of cryptos right now, like Ethereum and Litecoin. So many charts right now are showing hidden bearish divergence. Go look it up on Google. What does hidden bearish divergence imply? It implies a continuation of a downtrend, okay? We've pretty much been in a downtrend for crypto and stocks. I mean, Bitcoin had a nice little move over here in the last couple of weeks, but obviously before that you had a large pullback. So in your overall downtrends you've been seeing for like, a month to 2 months now, this hidden bearish divergence is implying that we're not bottomed out yet, that we have more selling to do. And if we go over to lower time frames, you can take a look at the price action from today on the S&P 500. You gapped down. You had a little bit of a bounce. This one candle was the only trade I alerted today. I alerted SPY calls today. Take a look at this. I'm not even going to really go over the day trade. We'll just talk about it like for 1 second. But in premium, I alerted SPY calls right over here, exactly where this green arrow is. I alerted SPY calls and they went up 20% on this move right over here. And I literally also said in the Discord that I wasn't personally in the trade, but if I was in the trade, that it's where I would have taken profits. I said I'm not personally in it, but this will be my first target if I was, and I'd scale out based on how it reacts to the VWAP, and unfortunately it couldn't really hold it or hold above it. But yeah, the only bounce in the market today I actually alerted calls for that actually went up 20% pretty quickly, and then you just had a horrible afternoon. But yeah, you gapped down. You had a nice little bounce off of a previous gap fill from February 15th. Couldn't break the VWAP, and then you sold off and sold off and sold off and sold off into the close. Going into tomorrow, you have one thing on low time frames that could let you have maybe some sort of a relief bounce. Futures are very green right now. I mean, the S&P futures are up 0.6%, NASDAQ futures 0.75%, Russell futures 0.8%. One thing that could let you bounce tomorrow, which I did also share in the Discord, which is free to join. The link is in the description. Let me see if I could pull it up where I shared this. It's a while. Here we go. So there's this 15-minute shark that developed on the S&P 500. You do have a little bit of a gap. I'm not a big fan of harmonics with gaps within them, but you still did make, you know, all the different pivots, and you got a bullish shark. You hit the PCZ, and that's really where you're opening tomorrow. So if futures are green and you gap up, then it's also a little bit weird, because let's say you gap up to, I don't know, like 439, 440, if the futures hold, then it's like you know, maybe you come back down and retest the PCZ, maybe you break it down, maybe you bounce, who knows. But you have this on lower time frames going into tomorrow, but we'll see. This is like, I mean, this is, as Mitch Ray would say, hopium. You know, I don't know if this pattern on the 15-minute chart is strong enough to reverse the whole entire market with everything going on, but it could lead to a little bit of a short-term bounce. We'll see what happens. If that doesn't play out at all and you end up making a lower low, you could also maybe get classic bullish divergence. So on lower time frames, you certainly have different things that could align. Nothing's really confirmed yet. You still need to see how things look intraday, but it's not the end of the world on lower time frames. However, on higher time frames, I mean, I don't know, it's not looking great. You kind of have this 436 support. You can see that this is a support. Okay, this is your level that you really want to hold as long as possible, but I don't know if it's going to be able to hold it. We'll see. You know, it's a low from over here, it's a high from over here, resistance from over here, support from over here, resistance over here. So you got 436. If you break 436, I mean, then we're talking like 426. Like, there's really nothing in between 436 and 426 on the S&P 500. So yeah, that's really all you got. On the daily, that head and shoulders potential is still very, very alive, and it's not looking great. You had 2 days above the 200-day moving average for the S&P, and now you just had a very quick close under it. This is your lowest close of the pullback you've seen since February 9th. I don't know. This is kind of your next support. Like on the daily, it does look like you're heading towards this inflection zone to test the neckline. Maybe you bounce there, maybe you don't, but it looks like that's where you're headed to. So it's a little bit, it's a little bit conflicting. On lower time frames, you have certain things that could lead to a bounce, potential 1 hour classic bullish divergence, a 15-minute bullish shark, but that's all very short term. Longer term, you still don't really look good. You're still making a lower high until you break above 4,580 on the S&P 500 or on the SPY 458. It's a little bit tough to say that things look bullish. So that's the S&P 500, the QQQ. I guess supports within this zone for the QQQ. So you're not really at support yet for the market, and you have hidden bearish divergence. So look for 335 to 342 to be maybe support. That's also your low from January. Let's move to NASDAQ next. You rejected 14,180. Go back to last night's stream. I said that was a huge level. You could not break it. You gapped. You were testing it yesterday, and then you gapped down today. You never even got close to testing it. You're selling off again. And as long as the NASDAQ is under 14,180, it does not look bullish to me. So you get back above it, fine, it looks bullish again. But as long as you're under it, I'm not a big fan of it. Maybe, you know, maybe eventually if it does something like this, you know, double bottoms, and then you get like, one second. You get classic bullish divergence, it double bottoms, it breaks the supply line, and then maybe it looks a lot better to me. I'm not saying like first, like, you know, maybe it sells off, maybe the market crashes, and down here it looks, one second. Maybe the market crashes, which I hope it doesn't. And then down here, it looks bullish to me. I'm just saying short term, as long as you're under that, it doesn't look bullish to me. Of course, things could change in the future. So that's really it for like the large cap ETFs. Let's talk about the ARK ETF now. I told you yesterday it's at a make or break area, okay? It was right over here testing this bear flag demand line, but also right next to this long-term falling wedge supply line and the bear flag 1 for today. So this broke down last night. I don't think I was live last night. Was I live? I was live last night. Last night I showed you how somebody got like $15 million worth of ARK puts for this Friday. Whoever that was, congratulations. You're probably not watching the stream. You're probably on a yacht somewhere. But congratulations on your puts, because the ARK went down 6%. Somebody else also got like $20 million in Tesla puts expiring this Friday. Tesla was down 5% today. So yeah. I don't know. I think the ARK ETF could be headed down to 61. I think that would make sense. That's where it was before the COVID crash, to backtest that high. It actually did backtest it over here in June of 2020. You could see it was resistance over here and support over here. That's not a coincidence. For people that say TA is fake, tell them why the ARK bounced off of this exact price to the cent pretty much. I don't know. Just ask them why it did that. But that's where you could be headed to. We'll see. And then maybe over there you get triple classic bullish divergence, right? But you're not really there yet. So right now on larger time frames, I just don't see a bull case. You're not even really oversold. I don't know. So it's going to take some time. And then the Russell 2000, same thing. You kind of broke down from this bear flag. You're back under the range. You were above it for 2 days. You have potential hidden bearish divergence. That's where things are looking. All right. We had make or break areas and we broke. We could not break above. We broke down. And as long as we're under those make or break areas I brought up last night on stream, I'm macro bearish on the market. And that's fine. Why is that fine? Because we're still crushing it with day trades. These are like the last 34 trades in premium. Okay. And this is pretty much, but this is probably, most of them are probably from this year. I don't know the exact math, or not the math, but how many are from this year. But I know, I think there's been like, I think 20 is like how much we did in like the last month. So this is probably somewhat around how many trades we've done in 2022. So we had an official correction for the market this year. And these are the trades so far this year, roughly. We'll just keep day trading. You know, there are a couple swings here and there. We actually had Fisker hit its target. Lucid, we'll see what happens. Baba is a long-term trade. We have a few swings, obviously not even close to the amount that we had back towards the end of last year, which we had a pretty rough cycle of swings, but we'll just keep running it with day trades. It's all good. I've been sharing day trades and non-premium as well now, since, you know, the market's not really swingable. So that's how I'm looking at things. And also just for some education, a lot of people ask, how do you trade a bear market? What do you do? I'm going to show you all a little bit of a secret, okay? So let me see the best way to do this. I don't like that song. Okay. You're on trading view. You're on trading view. All right, you're gonna use the left click on your mouse. You're gonna double click your candles, or you're just gonna right click anywhere on your chart and go to settings, whichever one you want to do. But double click your candles. You're gonna go to body. Okay. You see how it's green on the left and red on the right? You're gonna flip those. So now the red candles are gonna become green candles, and the green candles are gonna become red candles. All right. So this is the first thing we're gonna do. This green, we are going to be making. Before I change this, I think I can do Control Z, can I? Okay, I can. All right, so I can put that back. All right, so the green we're going to be turning to red, and the red we're going to be turning to green. And then also we got to change the board so it looks like, okay. Is that a different green? Perfect. Okay. That's step one, all right? All these green candles are all technically red candles and vice versa. Now, if you're on a Mac, you're gonna be clicking Option I. If you're on a PC, I think it's Control I, just look it up. Look up how to inverse charts on TradingView. I'm pretty sure it's on Google. And there we go. And there we go. Okay? It's pretty much the same thing. So this stock has been selling off, right? The stock has been going down. And really, all you're trying to do is look for the same types of variables. So let's say, I don't know, you get a nice bounce off this little range here, and it breaks out to the upside based on your chart, and then it back tests, and then it runs back up again. A nice little break hook can go over range. You could trade that with puts, but actually it's not going up, it's going down, because look at the numbers. So it's Alt and the letter I on PC. So that's how you could trade a bear market. It's that simple. Or you could just learn how to trade bearish patterns, which if you didn't watch the course, all the bearish patterns, bearish harmonics, bearish divergences, resistances, bearish indicators, all those are in the course. So yeah, you know, I'm definitely more of a bull. I like to be a bull, but when there's times to be bearish, you got to be bearish. And I'm not telling you that you have to be bearish right now. I think there's a lot of stocks that are not going to continue selling off with the market, even if the market continues to sell off. But you got to understand there's two sides of this game. It's not just up, up, and up, and up. We'll see what happens. I'd love for all these bearish technicals on the market to get invalidated and everything to just rally. That would be amazing. So if there's any time I want to be wrong, I want to be wrong when I'm bearish. I want to be right when I'm bullish. And I want to be wrong when I'm bearish unless I'm like in puts or something, which currently I'm actually really not in puts, but we'll see what happens. So yeah, you could trade literally the same exact way, okay? Just change your red candles to green ones and your green candles to red ones, and then inverse your chart, and then you could trade the same exact thing. So you could look for your demand lines, right, to buy puts off of demand line bounces, okay? And then on breakdowns, you can maybe play calls. Remember, everything is opposite when you inverse your chart. So you could literally do the same exact things. A bearish flag is it's the same type of structure, but the flipped version of a bullish flag. Same thing for a falling wedge or a rising wedge. So if we take a look at something, I don't know, like CLOV on the daily. Whoa, look at this massive, just absolutely massive rising wedge, which looks like it's about to break down and absolutely dump. Maybe you could play calls on that because this is an inverse chart, so going down would be a good thing if you're in calls, or a bad thing if you're in puts. So if I just mess up any of like the things I said, I'm sorry. I'm trying to say everything inversed, so I might have just messed something up. But yeah, again, none of this is financial advice. I'm just trying to share with all of you how you can learn to start trading the opposite side. But do whatever you want. Of course, another strategy is just long-term dollar cost averaging. Whatever you want to do. I'm just trying to throw out different scenarios. So let me try and change everything back to normal. I just got to keep clicking the undo button. Hopefully that made sense. And there we go. And now we're back to normal. So yeah, that's my overall thoughts on the market. I mean, on other indices on lower time frames, you're just kind of testing your lows from the 14th was what, Monday? Yeah, from Monday. Russell's kind of breaking down from this bearish flag. ARC already did, and it's already been playing out to the downside. So that's really what you've got going on. Apart from the indices, volatility index, it's making another higher low. We talked about this earlier in the week that, you know, you're now starting to make higher lows on the VIX, which is not good for the market. You're doing it yet again. The US 10-year, we talked about this as well. I don't know, this might have been on Monday night. I don't know. It was one night this week where I showed you this 4-hour those bearish, triple classic bearish divergence and the resistance. What did I tell you? What did I tell all of you? I don't know if this was Monday. It might have been Monday or Wednesday, but I said, I think it was Wednesday or last night. I said, you have triple classic bearish divergence, you're testing resistance, maybe you start pulling back to back test your breakout. What did you do? Let me go on the 4 hours so a bit easier to see it. You pulled back, you back tested a very important resistance level, and you bounced off of it. Let's zoom out for a little bit. This blue inflection zone over here was resistance and support from 2019, okay? And you now just back tested the breakout of that. So this could continue higher as long as it stays above that inflection zone. And the dollar has been kind of going sideways. Gold is soaring. If you're a constant stream watcher, I was screaming, literally screaming over here that gold was looking pretty bullish to me. And I also showed you this stock, gold. Yeah, not GLD. 1 second. I think it's gold Barrick or something. Barrick gold. Okay, I showed you this. I told you all in these areas that this was one of my favorite charts that I charted. Like, it was just one of my favorite charts out of any asset class. So there's always opportunities. I'm just trying to throw out different ways you could all trade if we do continue selling off in the market. But again, I'd love for us to just violently reverse to the upside like there's no bearish thing in the world, but who knows? So that's how things look. I'd say for the bulls, you just gotta hope that you make a higher low or at least an equal low from your lows in January. Whether that's literally right here, like literally today's the low, whether your low is down over here, maybe even testing this wick, whatever it is. Because if you make a lower low, not only are you making a lower low for the first time in a long time, but you're also breaking the neckline of the Head and Shoulders on the S&P. So that's my thoughts on the market. I'm not trying to be like a mega bear or anything. I could be bullish again tomorrow. I'm just telling you what the technicals are showing me, and if the technicals change tomorrow, they change tomorrow. It is what it is. So that's how things are looking. But remember, I did talk about those lower time frames. If those somehow play out, that could save everything. So we'll see what happens. I'm not telling you what to do. I'm just showing you both sides of the argument, and we'll see which one plays out. It's all just probability. So yeah, let me go over the swings for a second here. Make sure to hit the like button, hit the subscribe button. If you're in the chat, say what's up. If you're not subscribed to the channel, I have no clue what you're doing. Like, look at me in the eyes. Hit the subscribe button, okay? And yeah, check out the links in the description. You can join the Discord with all this amazing education. It's free to join the Discord. If you want to join Premium, it's there. These are the last 37 alerts I've given in Premium. Yeah, these are the last 25. Actually, there's a few more that are wins under this, which I haven't updated. The sign up for that's in the description. That includes more swings, options ideas, including day trades, a weekly watch list, and bullseye trading bot, which looks something like this. This is the watch list. This is the watch list I sent last Sunday, or just 5 days ago. It had bearish and bullish charts on it. These are the options. And then I'm not going to be showing the swings because they're still ongoing, but yeah. Links are in the description. Let's talk about the swings. We're going to get started with the ugly in terms of how it did today, but also in terms of how it's been doing for months. Clover Health, not doing well. It's tough. It really is tough. You now have hidden bearish divergence nearly confirmed. I've been saying it all week. It's going to come down to earnings. You know, I've said since the beginning of the swing that I'm just looking at it as a swing. I see a very large falling wedge. There was classic bullish divergence. You were getting a breakout on the 4-hour chart right over here. You were getting a breakout on the 1-hour chart. It's just not following the same technicals you'd see in a regular market condition on a stock that's trading regularly. It's just ultra bearish sentiment, and it has been for almost since last June on Clover Health in the macro, and it is what it is. You know, I was very, very open about this swing from the start, and it's tough. You're just hoping that you can somehow double bottom here. You put in a new all-time low today, I believe. It tapped the stop, but it did not close at it. We'll see what happens. It could get stopped out tomorrow. It can never get stopped out, and it get all the targets. We'll see what happens. That's just really all I can say. You all know I'm going to keep it truthful with you. That is what it is. Let's change to some good now. Fisker hit the first target of the swing. We talked about this last night on stream. This happened after hours yesterday. So you can see over here, the first target of the Fisker swing is 23% gain, and that's at $14.34. If we go to extended hours, you can see Fisker went up to $14.52 after the earnings yesterday. So Fisker swing hit the first target, and that's cool. That's really, really cool to me, at least. Every single one of these green circles, I alerted a swing on Fisker. These are not the only swings. I've alerted some failed swings on Fisker. There was a couple in this region over here that failed, but most of the Fisker swings have been winners. There's like a couple here that failed, maybe like one here or something, but you know, those were probably 10% stop losses. This was over 100% profit. This was like a 40% profit. It should have been a larger target, but it wasn't. This was like a 60-70% profit. I don't remember what this one was. I think it was, I don't know. It was a nice profit, but yeah, all these green circles were swings alerted on Fisker, and this is the most recent one. It's one of my greatest accomplishments, and hopefully you're enjoying that accomplishment and the price action. So in terms of the technicals now, it already hit this first target after hours, but if we're just gonna be looking at market hours, you broke out of your down sloping channel and you back tested it today. As long as you're above 1220, I still like Fisker from a technical standpoint. Even if you break under, you just want to stay above this green demand line. So that's really how I'm looking at Fisker for right now. And that's really it. It's a winning trade. Hopefully you can continue to hit, you know, the second, third, and fourth target eventually. It could take a lot of time, but you just want to stay above these general areas that you just broke back above. That's all you want to do. BABA was flat today. No update. This is a very long-term swing. Lucid was up in the morning, and it was above the 200-day moving average in the morning, and then it sold off in the afternoon. But you're still above 25.75. You still have classic bullish divergence. You still like triple bottom at the PCZ, but bullish guard. You just want to stay above 25.75. Okay, so that's really it for the swings. Tesla. Remember last night I told you all that I was watching Tesla for potentially playing puts on it today or tomorrow. I missed it. I just missed it, and that was really frustrating today. Look how close it got. I told you all that there was a bearish bat or resistance, bearish divergence on Tesla up at 932. It got up to 927. It was $5 away. only I was watching this. But basically it hit the 786 and then it pulled back. From the high to the low, it pulled back 5%. Would have been a great short to end the week, but I missed it by a few bucks. Unfortunately, it happens. What else? Facebook, I told you I was watching for the reversal. It gapped down today. It was doing all right. It was only down like 1 or 2% in the morning, and then the market just kind of pulled everything. When the SPY did this, right over here, it's just like everything got pulled. So many stocks they were slightly red, but not horribly red. And then the last couple hours of the day, it was just everything just got dragged down. So yeah, Facebook. Still watching this level. You can see there's a high from July 25th, 2019. A low from February 20th, 2020. A lows from June 30th, 2020. So it's in the new inflection zone, but you'd probably want it to get back above 218, which is your high from over here, your high from over here, your low from right over here. You probably want it to see get back above it and bounce above it like it did these few days, not yesterday and today. So yeah, that's pretty much what's going on with the market. I haven't really read the chat too much. Futures are still up pretty nicely, over 0.5% on all the major indices. Hit the like button if you don't already. Hit the subscribe button. It's also a 3-day weekend. There's no trading on Monday, I believe. So you got to keep that in mind going into tomorrow. One thing I've seen very often on 3-day weekends is like, the Friday leading up to 3-day weekend, you have very, very heavy volume and high volatility in the first couple hours of the day. And then like out of nowhere, everybody just packs their bags and leaves. The afternoons before 3-day weekends sometimes get really, really, really slow. We'll see what happens tomorrow. I mean, we're in a hectic market, obviously, right now. So yeah. I don't know, I don't really see much in the chat that I can like reply to. Question is, when this is all said and done, how many stocks are $1 or sub $1 getting brutal? It's crazy. It's actually crazy how much we've sold off on a lot of these growth stocks and mid caps. They just got demolished. I think somebody went on CNBC today and they said that small caps are the cheapest they've been in 2 decades. Okay. In 2 decades, keep that in mind. And we're talking about multiples here. Obviously the Russell 2000 has gone up over time, but we're just talking about multiples, okay? And you can just look at so many small caps. For example, Wish went from 15 to 2. CLOV went from 28 to 2. Fisker went from 30 plus to like $9. Like Palantir, Tattooed Chef, and we're getting to like mid caps and stuff. DraftKings, Penn, Neo. Just look at how many stocks are down 50, 60, 70% from their highs. It's crazy, absolutely. I wanted to say something else. I'm trying to think about what it was. Oh yeah, so somebody went on CNBC. I forgot who he was. He said that based on multiples, small caps are the cheapest they've been in 2 decades. And I wanted to make like a point about that. I guess that's just the point. I mean, it's just crazy. Oh, okay, this was the point I wanted to make. All right, so in the last 2 decades, this is what the S&P 500 has done, okay? Pretty much this, okay? So you're telling me that small caps, based on multiples, are at their cheapest levels after a run like this for the overall market. That just shows you what type of selling you saw in small caps and mid caps in just the past year, since last February when things like the ARK ETF topped that over here, okay? 57% drop from the high that was just a year ago. It's not like it was like 5-10 years ago. This was literally a year ago. It's crazy. But at the same time, you do have to see, what happened before, right? After the COVID crash, we had one of the probably the most insane stock market run in a year that you've ever seen. I don't know the actual numbers. Maybe something crazy happened in like 1933 or something. I don't know. That was like right after the Great Depression, right? I don't know about that. Maybe a different year, but who knows? But it's interesting to see that you have things like this developing. I've talked about this on stream before. I know Cheddar Freeze has as well, but it's all just one big harmonic. If it does turn into a bat, the PCZ is down at like $50 almost. Hopefully it doesn't get there, but that would be very, very technical. If the ARK ETF did drop to $50, look at, oh my gosh, you have the PCZ of a bat, and you have historical areas at that price point. I will go long the ARK ETF if it's at $50. I'll probably get leaps, unless like, I don't know, there's like a meteor hitting the earth or something, and I probably won't. But that's the ARK ETF. It's interesting. A lot of major harmonics. I mean, take a look at Lucid. Take a look at AMC. All of this, you know, the crazy run after the COVID crash, the crazy sell-off in the beginning of last year, the bounce towards like, you know, August, September, and then this sell-off in the last few months, it all just created large harmonics on a lot of different mid caps and small caps. And they look, in my opinion, a lot better for reversals than a lot of large caps, which instead of showing the full waves drawn out, a lot of large caps are looking like this. You know, a lot of the small caps, mid caps, they've already completed their harmonics. Now they're getting down to the PCZ levels and trying to double bottom, and they're just bleeding on low volume. But a lot of large caps only now just look like this. They only look like they're at their C point. They haven't even completed their final wave. Take a look at Apple. Take a look at MU, right? The X, the A, the B, the C is there, but the D is not there. It didn't make the final move down. So it's interesting. It's interesting to see the difference right there, but you're still seeing a market where, you know, the SPY's down 2% and the Russell's down 2%. So it's not like you're seeing the Russell like outperform things as of yet, but again, we could enter a stock pickers type of market if these large caps sell off and the small caps, mid caps show relative strength. Roblox, Palantir, I think they both sold off on earnings. Make sure to hit the like button, by the way, if you didn't. Roblox, yeah. Earnings, we talked about it last night. I'm not a big fan of Roblox until it breaks out of this channel. That's literally it. And then Palantir, you know, it's trying to break out of the wedge, and that's why I said, you know, it didn't really matter because earnings was there, and earnings was there. And today, it looks like you gapped down and closed down 16%. You pretty much just closed at this low. I said that this was a support. I'm not sure what happened after hours, so we can take a look really quickly. Actually bounced up a little bit to 1191, but yeah, I said I think this was last time on stream. I said your support is 1177. I had this charted. Look at this. I went and charted this last time on stream. That's exactly where you closed today. So earnings didn't. The reaction to earnings didn't go. I don't know what the actual earnings looked like for Roblox and Palantir. I'm just talking about the reaction to the earnings. They didn't look good. The reactions didn't look good. So yeah, you close right at support. All right, let me see if I could pull up. Thing is, I don't know if I need like a CNBC account or something to rewatch. I think it's called Halftime Report. So can we only watch the clips? Let me see if it's on YouTube. Okay. There's only clips. I want to see the full interview. Okay, I guess we could just watch the few clips that CNBC has uploaded. It's like 15 minutes or so. So we could do that for a little bit. And yeah. So I'll probably do that time instead of take requests. Honestly, it's the overall market that I think is more of the focus. Of course, there's going to be individual stocks doing their individual things. Pizza Box says, how about just staying cash until the summer? Whatever you want to do is up to you. You know, there's so many different ways you could play everything that's going on right now. Cash, gold, short, long-term cost averaging, commodities, NFTs, VC. Like, you could do anything. You know, there's always something that's going up. There's always a way to make money or save money if you're talking about cash, but also you're technically losing money with cash over time. But again, if you're just talking about until summer, you know, unless something crazy happens with inflation, it's not going to be a huge difference that you're probably going to be able to tell. So I don't know, it's up to you. I'm not a financial advisor, so I can't really say what to do. One second, I'm just opening up the videos. Trying to get the ads done so I don't have to play them on stream. Give me like 15 seconds and we'll start watching. Make sure to hit the like button in the meantime. So yeah, the next stream will be on Monday night because the market's closed on Monday, so no stream on Sunday. All right, here we go. Turn off the music. I have to unmute this site, so I need to wait for this ad to finish. 10 more seconds, and then we have all 3 clips loaded without ads, hopefully. 2, 1, pause. All right, there we go. So we're going to start with this one. Okay.
Investor of the past few years. She was one of the most successful too until the past 6 months, when many of the stocks she's most identified with plummeted to new lows. That upset has caused a barrage of criticism of her stock picking prowess, her research, and record. Here now in a CNBC exclusive is Cathie Wood. She's the CEO and CIO of ARK Invest. It's nice to see you. Welcome back.
Okay, so I actually did watch this part.
It really is.
This was the only part I watched. I'm going to skip a little bit. Hold up.
From a flow point of view, just before we get to the answer to your question, last year we did inflow. A lot of that was front-end loaded. It was $17 billion. And in the last 30 days, we are inflowing again, net inflowing a little less than $500 million. So what we believe is happening is because we give our research away, because we are so transparent about what we're doing, and because our research is so good, I think it is the best in the financial world when it comes to disruptive innovation. I believe that there are individuals who are reading our research and saying, hey, this makes a lot of sense. I didn't know this. I did not know that there are 5 platforms involving 14 different technologies that, if we're right, are going to move from being valued in the equity markets, public equity markets, at $10 trillion to roughly $210 trillion.
So I talked to Mehdi about this in the Discord today, and I think that I agree. I think they do good analysis. I've seen a lot of their reports. I think where they've messed up royally in the past year is risk management. Now, that really aggressive approach they have was great over the past few years, where they outperformed the S&P, the NASDAQ, and a lot of other funds. But then when you're on the flip side and you're trading things like innovation without a lot of risk management, apart from just buying the dip every single day on a lot of these names that just kept dropping. I mean, something like Robinhood went from 70 something. Robinhood went from 85 to 12, and they were just buying and buying and buying and buying, if I'm not mistaken, and so many other stocks just like this. I think like Skills was another one. I don't know if they're still in that. Skills didn't have a great time. DraftKings is another one. and they just don't really have risk management. So you see something like ARK ETF selling down every single day for a while, not every day, but overall, and they're just not really managing risk. And you have something like the S&P 500, which is just the S&P 500, and this is heavily outperforming, but it's much, much more balanced in a way that can hold up against volatility compared to something like this. So that's just how I look at it. But yeah, they do have good research. They just got to execute that research.
46% compound annual rate of return. There is one market that is getting this right. It's the private market. Last year, and you're right, we have had a significant decline. If you look at our peak, which was February 12th of last year.
And that was really funny to me that she knew the exact date of the peak. I mean, she's probably had nightmares about it. I think she's done a great job overall. Obviously not the last year, but she knew the exact top, and then I think she said something else.
Roughly a year ago, we and you look to the trough, which we believe was January 27th. That was a 57% drop. But if you look
and she knows
at
the bottom.
our appreciation from the depths of the coronavirus to February 12th, that was a 358%.
That's true.
Increase.
That is true. I was just talking about this. So, we were just looking at the chart, and I said, of course, you have this massive sell-off, but what happened right before it, right? A lot of people will focus on this part of the game, but this part of the game did happen first. They choked in the second half. That's really all it was.
We're seeing a lot of analysis of our performance out there, which is cherry picking, dates. And I've just given to you what has happened. And there's endpoint sensitivity to these dates. If you look at our returns on a 5-year rolling basis, and what I mean by that is take monthly returns and do 5-year rolling averages, we have outperformed both the S&P and the NASDAQ 100% of the time. If you take the same on a 2-year basis, I have those numbers here, we have outperformed the S&P 500 90% of the time and NASDAQ 81% of the time. We've just been through a significant downturn, a correction relative to the peak. And we do believe that innovation is in bargain basement territory. And there's just one other thing I'd like to add here. I went through the tech and telecom bubble and know very well what that feels like. And what we learned was that there was way too much capital chasing too few opportunities too soon. And the internet was, had been brought to life, and the dreams that investors had and the valuations based on potential eyeballs maybe 10 years out caused investors to fall all over themselves to try and raise their technology positions to north of their benchmark. And the benchmark had gone to 35%. That was a mistake. Too soon. The technologies were not ready. The costs of those technologies were prohibitively high. Cisco, Oracle, the traditional players back then were not going to bring us into the cloud and artificial intelligence age. They're completely different companies. And even
all right, so I was kind of on my other screen for a little bit there, but if I heard that correctly, so she's just talking about back, when you had the dot-com bubble, a lot of things were, selling off very, very roughly in the 2000s after the pop. But a lot of those companies now are things like Amazon, which was a horrible performer in the early 2000s, if I'm not mistaken, and now could have been life-changing money for anybody who got in during that dip, right? So I think she looks at a lot of this pullback as the same scenario, right? She's not really thinking about where these companies are or how they're doing in the past year. She's hoping for something like this in the next 10 years, which I hope it happens, because that could also be life-changing money for all of us if it does happen, right? But I don't know. I think there's still a lot of these types of stocks that are probably going to continue doing this for a while. I think it's just about timing. So there's also this clip that we can take a look at. What's up, Lump?
Companies are investing aggressively now because they see enormous opportunities, whether it's in the genomic space, the robotic space, energy storage, artificial intelligence, blockchain technology. And when you think about artificial intelligence, I think for us, and all we do is focus on innovation, the biggest surprise to us in the last 3 years is the amazing set of breakthroughs in artificial intelligence. We've got AI costs. We've got AI moving more than twice as fast as Moore's law. Costs dropping 60% per year if you account for both the hardware and the software. When you get the cost of something dropping that much, and to levels that are much more accessible and affordable, you're going to have an explosion in creativity. And that's what's happening. What has happened to our world, our traditional financial world, is intense risk aversion caused by, first, the tech and telecom bust in the early 2000s.
And this is the other thing I have to say. Like, we talked about this last night. There's times where fundamentals matter, and there's times when it doesn't. There's times when technicals matter, and there's times where it doesn't. All right, the last few weeks, the technicals were kind of pushed to the side while we've had all these different fundamental catalysts. But all these stocks that she's talking about fundamentally, that, you know, the companies have gotten so much better in the last year, you know, costs are going down and whatnot. Great, that's cool. But the market's not always going to perfectly match a stock's price to the company's performance. Again, I'm going to go back to Amazon, right? Look how Amazon performed in the beginning of its lifespan. Look at how Apple performed in the beginning. And the companies were doing well to become the biggest companies. They were doing what they needed to do to become the biggest companies in the world. But there's a lot of people who probably were buying the tops in the early days and selling the bottoms, and they never stayed in for 20 plus years. So she's definitely playing the long game here in a lot of these companies. I'm just worried that a lot of them are not going to turn out to be the next big companies of the world. You know, it's not easy to look at things like innovation because we don't know what the future is going to be. And also at the same time, you know, her fund is down a lot in the past year because she's so focused on how the companies are doing. But in my opinion, she's not focusing enough on the risk management, the market analysis. It kind of just seems like she doesn't care what the market's really doing. Of course she does. She manages a lot of money. I'm just saying, if we're just looking at the cover of the book, it just looks like she's not. I know she does, but I'm just saying it just looks like she doesn't, because she's not really putting herself in a position where she's playing around how the market is doing. She's just kind of getting into stocks that have bullish fundamentals to her that could go up very, very much, or can go up a lot in the next 5 to 10 years, but it's just not the time for them right now. It's too early, like she said. So I feel like she's kind of, she's making a good point, but at the same time, it just shows why what she's done has been wrong in the past year. And I think if they started using something like technicals or reward to risk systems, or maybe if they just started watching my streams, they could learn something. And of course, I could learn a lot from them in terms of fundamentals. I'm not trying to act like I'm smarter than them. They manage a lot more money than I do. Not that I even really manage money. I'm just saying for myself. So like, you know, I'm not trying to hate on them. I'm just saying it's just crazy to me how, like, you know, this big money doesn't even think about these simple type of things. Like, I feel like a lot of people have egos when it comes to like technicals. Like, ew, a double bottom, who would care about that? The only thing that matters with the stock is its PE ratio and how the last earnings were, until it doesn't, right? Until it doesn't. So that's just how I look at things. I don't know.
And then even more so after 08, 09. And what does risk aversion mean in the traditional world? Risk aversion means get close to your benchmark sensitivity. So we have, I think, one of the most massive misallocations of capital in the history of mankind. You have investors investing in the past. Benchmarks are where they are, and especially the largest companies and stocks in the benchmarks are where they are because of past successes. If we're right, I
100% agree with that statement right there. 100%. I think that's something that actually really frustrates me as well. And that's very, very true. But also at the same time, even though it frustrates me and it's true, it doesn't matter. What matters is how the market's moving, right? So many people, this is the issue. She's talking about, these fundamentals are so great, right? But that doesn't matter. At the end of the day, it doesn't matter how good a company is, or even technically, to go against myself, it doesn't matter how good a chart looks either. All that matters is the performance. You cannot correlate the thesis of a trade with the execution of a trade in terms of the result of that trade, if that makes sense. Of course, they have to be related at the end of the day. The thesis has to turn into the execution at some point. When you have the result of the trade, the execution is going to be what puts you in a place where you either make or lose money. So I think it's just it's a weird path to go down, but she's right. It's a very weird thing. She's right, but at the same time, she's also showing why she's wrong. She's right about why the market shouldn't even be where it is right now, but you have to accept it for what it is, and that's what it is. The market's not going to be exactly what it should be at any given time. It's never going to be exactly what it should be. The market's always forward-looking. It's based around emotions. It's not based around the exact fundamentals and balance sheets of companies or the candles on a chart. It's not based on that. It's based on how people are buying and selling and the orders going in and out of the books.
Those are the companies that are going to be disrupted. And you can see, if you look at large cap growth portfolios or large cap any portfolios practically, you'll see many of the same stocks, but in growth, you'll see the FANGs, you'll see Microsoft, you'll see NVIDIA, you'll see Tesla, because it was put in the benchmark finally. Only one we overlap with is Tesla.
Why such a reticence, though, to concede that some of these stocks that have suffered dramatic declines will never come back to the level at which they once were? You won't concede that? You think all of these stocks that I read on that list, plus others that are down by significant amounts as well, are really going to come back to the prior levels they were?
Absolutely. Absolutely. And beyond. You'll notice what we do during risk-off periods. And this one has been particularly long, 1 year. Which has taken our stocks into bargain basement pricing, I'll say.
Absolutely, all the stocks will not go back to where they were. Okay, we did have a bubble. She literally said in this interview that ARK did not have a bubble. Cathie, I'm a huge fan of your work, but this was a bubble. Okay, this was a bubble. Okay, we had aggressive retail buying after the COVID crash. It was an uber bullish market. The bubble popped over here for most mid caps. We're on the other side of it now. And we are entering deep value territory, as you say, on a lot of these stocks. I 100% agree with that. We are entering deep value territory, but it was a bubble, and a lot of those stocks are not going to go back up to where they were. However, I also said in the Discord today, I told Mehdi and everybody else, I do think the ARK ETF will see a new all-time high in the next few years. I think that a lot of these stocks will go back up, but all of them will not. All of them will not. There are going to be a good handful of them that are done forever, in my opinion. I'm not going to name names. But I think we're in a situation where you have to be able to identify what were the stocks that were just part of a bubble and what were the stocks that are now down 70-80% from their highs for absolutely no reason apart from other stocks in similar categories selling off as well. So we're getting this divergence between, we had most of these stocks just up insanely over here at all-time highs, and now we're over here. But there's going to be one basket of stocks that do this and one basket of stocks that just do this. And you want to identify these ones. I feel like we've been watching this for like 10 minutes. It's like a 3-minute clip. So I'm sorry for ranting so much, but I'm trying to react to it.
I'll say again, but the names you read have migrated into our top 10 because we have concentrated our holdings towards our highest conviction names. And most of the names you read are in our top 10. I think many of them are platform companies. Many of them are going to harness artificial intelligence in a way that others cannot. I mean, Tesla has been the best case in point, and I think we have a lot of Tesla-like stocks in our portfolio. We're really looking for companies that are going to use artificial intelligence and create competitive advantages that no one will be able to catch.
This is ARK K. These are the top 10 holdings: Tesla, Teladoc, Roku, Zoom, Coinbase, EXAS, U, NTLA, Path, and Square. I know for a fact that Tesla's well off the highs. Teladoc, Roku, Zoom, Coin, all their top 1, 2, 3, 4, 5 holdings all got demolished pretty much. Not really, I don't know, I wouldn't say Tesla, but these 4, they all got demolished. Especially Roku lately. I mean, today they had earnings, but I might have said something by accident. I think the lumps in the chat, I think most will come back. I might have said most of them are not going to come back. I was just trying to say, because what what I think Mike asked the question, or no, sorry, Scott Wapner asked the question. Is Mike or Scott? It's Scott, right? Scott. Mike Santoli is the other guy. Okay. So Scott asked the question, do you think all these stocks will go back up? And she said yes. The point I was trying to make is that all of them are not going to go back up. I think a lot of them are going to go back up, but there's also, I was just trying to say that there were a lot of stocks that were just part of a bubble that are not going to go back up. So I think, if I'm going to put a percentage on it roughly, I'd say like 75% would probably go back up and 25%, sideways, slightly up then down, dead cat bounces, sell off more. That was the only point I was trying to make. I'm not trying to say they're not going to. I still think the ARK is going to make a new all-time high in the next few years. So they all probably, not all of them, but most of them probably could go back up. And then also, ARK tweeted this. CNBC may have a 40-minute time horizon showing that they couldn't pay for the upgraded Zoom, but ARK's is 5 years, like we were just talking about. They're focused on the long-term aspects of these companies, even though they're using the short-term fundamental analysis for their short-term execution, which doesn't make sense to me, like I've been saying, but it did work out well for them in the past few years, so I can't really argue with that. Thanks for having us on CNBC. We are happy to pay for your upgraded Zoom account. You can't be a knowledge worker without it. So yeah, Scott was pressing her. It looks like I saw some things or some tweets saying like he said like, would you consider changing your analyst, which is pretty offensive to say on national television to the manager of a fund. And then I think he was just obviously really there's a couple of things I forgot. So help me out in the chat. There was a few things he said that were just kind of like, whoa, like you really, she hasn't done great in the past year, but he was just kind of like disrespecting from what I saw people say on Twitter. Yeah, I need to just stop using like Twitter as like my news, but it's just the quickest way for me to find things. So there's that. And then I think I also pulled up this clip on YouTube.
Now, your stock picking prowess, as I said, your research, which you are defending multiple times here. I'm wondering what you make of the criticism, whether you think it's gotten too personal, the fact that there is literally now an ETF betting against you. What do you make of that?
Well, I find that very interesting, especially the last. When you think about it, it's simply a call. Well, they're shorting innovation, and that seems to me over time that's not going to be a business. If you ask me, consider the source. But they're also not doing any research. They're simply shorting innovation. If they were doing research and could point us to reasons why what we have included in our portfolio is not going to participate in the new world order, then we might have a conversation about it. But the idea of shorting innovation in America is ridiculous, I think. But here's what I do know. When I see, and this is investor psychology, when I see people so sure that we are wrong, and that they are willing to set up companies simply to short innovation, and to set up funds to short innovation, that investor psychology, the pendulum, has swung so far in one direction that if we're right, then the rewards are going to be enormous.
I don't know how else to say it. They're not shorting innovation; they're shorting you.
Well, we stand for innovation. If it's an interesting, another interesting idea that surfaces as you say that. I, again, was in the bubble, but I was in the markets in the 80s and 90s. And where did investors go to access exposure to innovation? They went to the NASDAQ. I'm looking, and we're benchmark agnostic. Our goal is to deliver a minimum of 15% compound annual rate of return over a 5-year period. So we're benchmark agnostic, and until recently,
You already watched this?
I just didn't know how the NASDAQ had evolved. So if I look at the NASDAQ 100, what do I see? I'm shocked to see in there If you look at the overlap with our portfolios, and not just the flagship, I'm talking about all of our portfolios, the specialized ones, only 25% in the NASDAQ 100. The top 50% are the FANGs, Tesla, NVIDIA, Microsoft, roughly. That's very rough. And that's why you see so many top 10 portfolios, top 10 stocks in portfolios out there to be those. And then if you look further, you see food stocks. Like, this is not the NASDAQ I grew up with. You see like Kraft Heinz or Pepsi. You see Old Dominion and trucking. You see a CSX and rail. You see Dollar Tree and other dollar stores. You see a lot of bricks and mortar retail. And now it's that ilk of stock is roughly 10%. So what's left is what we would call either companies going to be disrupted by innovation, or they're involved in sustained innovation. So this is not the true innovation index anymore.
A boss to me is someone who invests in the people that are helping them to succeed. A love for people and for purpose. That is professional.
All right, so that was Cathie Wood. I gave my thoughts on it. The last clip, there wasn't really much for me to reply to. I kind of answered everything I was feeling. I wish her the best. I wish everybody who's invested with her and her fund the best. I hope everybody makes money. And those are my thoughts. Not much else to say. It's pretty wild. All right, that's going to be it for tonight. We have a 3-day weekend. Make sure to join the Discord. The link is in the description. Hopefully you enjoyed the stream. We'll be live on Monday night, or I'll be live, and you'll all be saying what's up in the chat. Is that right? Are you all going to be here on Monday? Drop the number 1 in the chat if you're going to be watching the stream on Monday night. And hit the like button, hit the subscribe button, check out the links in the description, join the Discord if you want to, join Premium, watch the free course, follow me on Twitter at ChampionVibe, and yeah. One second, I'm just trying to find a good song. So let's go with just mostly songs I'm going to get copyrighted.